just analyze somebody's pension for them, which I happily do for free. Just have a look at alpeshpatel.com/links. And they asked me, why has it been underperforming? And I explained to them there were several problems. So several of the classic problems they'd made in their SIP and ISA, and hopefully in this new tax year they won't make the same problems, the same mistakes. Again, this individual had too many stocks. I think they sprayed and prayed. They had some stocks which had done well about 5 years ago, and they still held on to them in the hope they'll do it again. They had stocks which didn't, when we looked at the analysis, didn't break down into good value or good value and good growth and good cash flow and good dividend yields and low volatility and good upside volatility. In other words, they didn't tick all the boxes. There was a lot of stocks he'd picked on name recognition. There were a bunch of funds which, okay, they sounded nice, AI fund, Asia Fund, Emerging Growth Fund, Solar Technology Fund, all of these kind of fund names which sounded nice, but there was an overlap. And when we looked at the underlying stocks in those funds, there were like 50 to 100 stocks in those. So whereas this individual might have wanted more of, say, Taiwan Semiconductor, they ended up with 0.01% in their portfolio of some such tiny little number. In other words, they were thinking they were diversified, but they were over-diversified. So that was another problem. They'd also had a couple of funds which they'd chosen through name recognition. I asked them, why have you got Scottish Mortgage, which has dropped 50%? And they had Fundsmith as well, which was just too slow getting out of tech. And basically, a lot of these funds, they have to keep about 95% of their money invested in the market, even when last year it fell 20%, or in the case of some funds like Blue Whale, fell 27%, not quite decimating pensions, but losing a quarter of the value of those pensions. So that was another reason they'd underperformed, is they just picked on name recognition as opposed to looking at a huge database of, say, 10,000 companies and then narrowing that down, which is what we try and teach them and educate them. Anyway, enough of that. Just thought I'd mention it with the new tax year coming up. If you want to have a look at things like those and my analysis on those, just follow me on YouTube or TikTok or Telegram, all of those places. I do this as part of my campaign for 1 million, to teach 1 million people how to be better investors. And the books that you see over my shoulder, there's 18 of them that I've written. I use that knowledge and know-how, as well as, of course, being an FCA-regulated hedge fund manager as well. And all of that expertise goes into those books over my shoulder, goes into making sure people get better at investing their SIPs, ISAs, pensions. So thanks all, everyone, for watching and listening. Thank you very much.